What's up, traders? So before this video gets started, if you guys can do me a huge favor and make sure you guys are subscribed to my channel. I actually had 86 subscribers. As we can see here, I had 85 subscribers plus one. So I had 86 subscribers, but out of nowhere, YouTube just yoinked 16 on my subscribers, which kind of sucks because I was really trying to hit 100 subscribers by the end of August, but I don't know if that's going to be possible. But make sure you guys subscribe and check out my other videos. These are some of my other videos that I've been posting. But yeah, guys, that's pretty much it. Make sure you guys subscribe, like the video, and leave any questions you have in the comments below. But now let's get into the reason you clicked on this video. The reason you clicked on this video was because you wanted to see the $1,000 dividend stock portfolio, and that is exactly what I'm going to be showing you guys. But if I'm being completely honest, I just started this account. As we can see here, I just started it right here on the 27th, and I've started managing this account. And what I'm going to be doing is I'm going to slowly be investing in some safe and secured stocks with good high paying dividends. And some of the stocks that I have bought recently were Cisco, WPC, SPG, and I bought 2 shares of SPCE because I'm pretty bullish on it, and I bought 2 shares of AMD because they had earnings and I'm also very bullish on it, and they announced pretty good earnings. I'm up $11 on just 2 shares, or I'm up 8%, which is actually very amazing, and this is the free share that I got. So now let's get into the shares. So now we're here on Yahoo Finance, and I will be slowly showing you guys the top 10 dividend stocks in my opinion. And here goes the first one. The first one will have to be Coca-Cola. So if we look at Coca-Cola recently, in today's, they didn't do too hot, but in the 5-day chart or even in the 6-month chart, they have recovered from the pandemic dip and they are steadily increasing. Hopefully they can get back up to highs around February 20th, and right now they're around $48, so they still have room to grow, and their dividend yield is around 3.38% or 1.64%. So that's pretty good, especially that they're a growing company. So I'm definitely comfortable holding it in the long run, and I see no problem in it. I see potential for the upside in the stock in general with good dividends, especially because I'll be holding it for a while. So the next stock would probably be T. It's a fairly common stock for among dividend investors for a good reason. They have a dividend yield of 7.10% or 2.08. And the same thing, guys, if we see this stock, it's slowly been growing, and at the same time I'm pretty bullish on AT&T with the new 5G phones. I can definitely see an increase in revenue towards AT&T and other phone service providers like Verizon, as well as whenever new phones come out, the AT&T usually goes up because there's an increase in phone sales. So that's why I'm also bullish on AT&T. The next stock that I'm also going to be holding is one that I currently own on the stock portfolio that I just showed you guys, and that would be Cisco. So Cisco Systems, the real reason why I bought it was because at the same time it has been growing and it hasn't recovered to the highs, and so it has like to grow, but it does offer a 3.05% dividend yield, so that's fairly good as well. It's only a $46 stock, so that's basically the reason why I'll be owning it, and I'll be owning it for a long time. So again, when you're dividend investing, you want to buy stocks and you want to just hold them for a while. You don't want to just sell out of it just because it dips $1 or $2. That's not really long-term investing. And if you're dividend investing, you're more than likely a long-term investor. You're a very safe investor, which is a great thing to do. Next thing that I will be investing in would probably be WP Carry. Same time, they have a 6.18% dividend yield, or 4.1%. Now, if we look at their 6-month chart, they haven't recovered from the coronavirus dip. And again, I'm very bullish on this company. I just believe that a lot of these companies will eventually recover. And if you hold long term, they probably should be going up. So the next one will probably be the S&P. Come on, let's be honest, guys. I have to include the S&P 500. Who isn't really bullish on it? They didn't have the hottest day today. But in terms of this one is actually all-time highs, which was around this coronavirus dip, and they have not fully recovered from that. And I feel that within a year or two they will. And of course, if you're a dividend investor, you're getting a small little 1.85%, but that's fairly safe. That's fairly safe and fairly good. Again, even the stocks that I'm buying, I'm planning on holding for a long time. So even if they're not doing too hot in terms of dividends, I'm just going to hold a long time for growth as well. So it just adds to it. I'm not planning on selling any of these things for like the next 5 years. So just hear me out when I say that. So if you look at Lockheed Martin Corporation, they offer a good dividend yield and they're a fairly good company. They're up $4 today. So that's pretty awesome. That's slow and consistent gains, which I will take. Not trying to lose huge. So this is fairly safe. So my next one would be SWK, which would be Stanley Black & Decker. Same thing, 2.80 or 1.78% dividend yield. They are down pretty bad today, but in the 6 month, they are slowly beginning to recover. and I am also bullish on this company. Again, even if I wasn't, I would just be holding for the dividend, and I'm gonna be holding for years more than likely. So the next one would probably be J&J, Johnson & Johnson. Good dividend yield, 2.74%. A lot of room for recovery, and it's actually already recovered pretty high up, but again, I will be holding for a while, so that's also pretty good. Next one would probably be SPG. SPG is Simon Property Group. Now, this company did dip drastically with the coronavirus dip, and they haven't really had a V-shaped recovery. They've been more pretty stagnant, trading sideways for the most part. They did kind of go up here, but nothing drastic. The entire market was very green on June 8th. If you look at a lot of stocks, they actually pumped up quite a bit on June 8th, and then it just continued downwards. So that is one of the reasons they have a pretty high dividend yield, which would be 8.39% or 5.20. So the reason it's so high is because they actually have been just decreasing and not really had a drastic increase. But again, let's hold for a long time, for 5 years, and see what comes out of it for that. The next one will probably be Caterpillar. Now, Caterpillar is a fairly safe stock. It's been increasing for a bit now. It's up here to 138. Previous was 139. So it's right about where it was before this whole pandemic hit. So these were basically all of the companies. And now I will be adding up the total value and the total price if you were to buy 1 share of each company. So here we are, guys. This is a rough estimate of what the companies cost. I rounded up a bit. So if you were to add all these 10 companies, it would cost you a total of $1,405, which is fairly good. Now, of course, if you only want a $1,000 account, you can just not buy the LMT and you will be right around $1,000. Now, this account, although it only has $1,000, there is a deposit of $5,000, but Robinhood caps you out for a certain amount and will only allow you to deposit like $1,000. After that, then they allow you to have the rest of the money. It just needs a while to transfer. So by the end of this week, this account should be up to $5,000 like it initially was supposed to be, but Robinhood is just taking a while to follow that action through. And in the meantime, they basically loan you $1,000 to trade with. But once all that comes through, I will be filling this out, all these shares. I only own Cisco, WPC, and SPCG. Like I said, I own 2 shares of SPCE. I meant SPG, 2 shares of SPCE and 2 shares of AMD and 1 free share of Kadi. But after the full transaction comes through, I will be buying 1 share of each. Like I said, I already own 1 share of a couple of these, and after that will still leave me with a leftover of around $3,000 in this account. And what I will be doing with that is I will be selling premiums on TNA or T. So if you don't know what selling premiums is, I'm basically going to be doing the wheel strategy, but that can be for a whole separate video. It's a very good method, a very safe method of options trading that can allow you to make like $50 to $100, maybe sometimes $200 every like 2 weeks with trading options. It's the wheel strategy. It's very safe. If you guys want a video about that, how to make $200 every 2 weeks with the $3,000 investment, let me know. But this is basically what I'm planning on doing with this account. Let me know what other shares offer a good dividend yield, or if some of these are not the best to be buying, and let me know why you guys think that. And for my opinion, if you're just going to be holding for the long term, it's pretty safe. Like if you're holding for 5-10 years, it's going to be pretty safe. So that is what I will be buying. That is what I will be putting into this account. So yeah, guys, stay tuned. Once I get the $5,000 into this account, I will be starting to do the wheel strategy. So even if you guys are fairly curious about that, you guys can subscribe. I'm sure I'll make a video about it, and I'll let you guys know how it goes. So if you guys just want to see me do it, to see how it plays out for me, you guys are just curious, you guys want to see me maybe fail or not fail, then just subscribe. I'll let you guys know any tips that I learned along the way. Like I said, I'm a small YouTuber, so if you have any questions, let me know in the comments below. Subscribe, give this channel a chance. I'm trying to upload a lot more. Thank you guys, and that's been it. Peace.